Roughly $10 million. That's the amount of liquidity violently ripped out of Bittensor subnets in a matter of hours. If you've been checking your portfolio lately, you've probably felt the sting of a 30% drawdown on your TAO bags. Panic is everywhere. Twitter is screaming that the network is centralized, the founder is dumping, and the AI narrative is dead. But here's the contrarian truth that the market is completely missing right now. This wasn't a protocol hack. It wasn't a structural failure of Bittensor itself. It was a targeted exit by one subnet operator, and it might just be the greatest stress test this network will ever go through. Today, we're ripping apart the on-chain data to see exactly where that 100,000 TAO went. We're going to look at the massive institutional backstop quietly buying the dip. And most importantly, we're heading into the charts. Because while retail is capitulating, the technicals are forming a textbook retest of our macro accumulation zones. Price is sitting around the $250 to $260 zone, fighting crucial moving averages. So the question isn't whether Bittensor is dead. The question is whether this manufactured fear is giving us a generational entry or a warning to get out. Let's look at the hard data. Right now, Bittensor sentiment out there is bordering on absolute despair. Over the last couple of weeks, we've seen extreme volatility, a sudden shift from euphoria to pure fear. This video is critical today because when emotion takes over the steering wheel, retail investors make catastrophic mistakes. They sell the exact bottoms and buy the local tops. As sophisticated investors, we don't care about the noise. We care about market structure, liquidity flows, and risk-adjusted returns. If you've been following the channel, you know this is my 18th video covering TAO since March 2025. I'm not here shilling a coin because it's the flavor of the month. I've been tracking this asset meticulously, trading it level by level. And right now, the fundamentals and the technicals are flashing a major divergence. The news headlines are painting a picture of total collapse. But when you zoom out and look at the actual infrastructure, the story changes entirely. But there's something hiding in the weekly chart that completely flips the narrative. To understand why this current price level is so incredibly vital for the rest of 2026, we have to look under the hood. Let's start with the elephant in the room, the Covenant AI situation. The full story is that Sam Dare, the operator behind Covenant, dumped 37,000 TAO on his own subnet holders across Templar, Basilica, and Grail. He publicly accused Bittensor founder Const of decentralization theater, claimed his infrastructure was being choked out, and then walked away with $10 million. The immediate exit shock was brutal. Between April 9th and 10th, on-chain metrics show over 100,000 TAO drained from the network. To put that in perspective, for every one token printed by emissions, users panicked and pulled out 15.6 tokens. The net extraction gap hit 118,000 tokens. That wiped out nearly a month of network growth in 3 days. Retail took a massive hit, with many main bags dropping close to 30%. But let's pause and look at what actually happened next. This is where the alpha lives. Const responded, debunking the claims. He didn't suspend emissions, he didn't deprecate infrastructure. He sold 1% of his own alpha holdings, exercising the same rights any holder has. More importantly, this localized rug pull exposed a vulnerability in subnet governance, and the protocol is already adapting. Const is pushing a massive upgrade called locked stake. This introduces a new dimension of ownership based on time plus stake. Soon, you'll be able to cryptographically lock tokens for a set duration. This completely alters the velocity of the circulating supply. It prevents instant, catastrophic dumps by large actors and rewards genuine, long-term commitment to the network. And if you think the subnets are dead, look at Templar, subnet 3. Despite the founder abandoning ship, it hasn't rugged. It still holds a $40 million market cap. The validators and miners are actively coordinating to replace the departed hotkey and organically reboot the system. That is the literal definition of decentralized resilience. The protocol survived a $10 million stress test without the base layer ever going offline.
While all this drama unfolds on crypto Twitter, the actual utility of Bittensor is quietly operating flawlessly. Look at Subnet 64, handling Minimax M 2.5. They are delivering enterprise-grade compute with 100% uptime over the last 90 days, and they're doing it for 12 to 99 cents, compared to centralized giants charging up to $15 for similar routing. The fundamental value proposition hasn't changed a bit. The network is still providing ultra-cheap, decentralized AI compute. Institutions know this. That's why Grayscale holds a massive 24% allocation of TAO in their decentralized AI fund. They aren't trading on Twitter sentiment. They see the baseline security. Right now, out of the 10.8 million circulating supply, 7 million tokens are actively staked. That is exactly 65% of the entire supply locked up, securing a $2.7 billion market cap while generating roughly 9% yields. That creates an incredibly thick buffer against a total collapse. Furthermore, developers are sticking around. Bittensor has 50 core developers, ranking 10th globally among all Layer 1 blockchains. They hold a 3% market share of global blockchain developers. Builders don't stay for dead projects. Finally, if you're looking for yield and understand the risks, the DeFi space is capitalizing on this volatility. Wrapped TAO liquidity pools on Uniswap are printing wild yields, between 77% to 100% APY on Ethereum. The liquidity is shallow, around $1 to $2 million, so it's a playground for nimble capital, but it shows the massive trading interest underlying this asset. Let's think about what this means for capital preservation. When we see Grayscale maintaining that 24% weight and 65% of the network stubbornly holding their stake despite a 30% drawdown in price, it tells us the macro environment for this asset is heavily insulated by diamond hands. The smart money is absorbing the panic from retail. They understand that the transition to the locked stake mechanism will essentially create a supply shock. If you drastically reduce the liquid tokens available on the market while maintaining enterprise demand for the compute power, the economic model becomes heavily skewed toward the upside. The noise is loud, but the on-chain data is whispering a very different, highly constructive narrative. But how does this translate to the price action? Let's dive into the weekly chart because this is where our game plan actually takes shape. I'm looking closely at the TAO dollar pair on TradingView. If you've tracked my trades, you know my primary accumulation zone for the long-term bag was right inside that green box, specifically between $120 to $190. I loaded up heavily there. Since then, price got out of the lower channel support, crossed the middle of our descending channel with a massive 55% green candle, retested it as support, and headed straight to the 0.382 Fibonacci level. This fib sits perfectly at $375. It acted as an absolute magnet. We anchored this fib from the high of $750 back in December 2024, all the way down to the $144 lows we saw in October 2025 and February 2026. When price tagged that $375 level, it was my take profit too. I sold more 20% of my original position right there, locking in gains. We had an incredible 160% rally from the bottom, so this current correction isn't just normal, it's incredibly healthy market structure. The price is currently about $250 to $260, fighting with the 21 exponential moving average, the red line. It's below the 55, the purple line, and below the 100, the yellow line. Notice how aggressively price rejected off that 100 exponential moving average on the weekly chart. We are back to the middle of the descending channel, marked by those orange dotted lines. The closest support zone is right at $240. Resistance is firmly planted at $287, which lines up perfectly with the 0.236 fib level. For new buyers who missed the lower green box, the recent covenant fear-mongering actually served up a gift. A daily pullback into a dollar-cost average zone from $290 down to $240 is a highly logical entry. If you are stepping in here, your invalidation level, your strict stop loss, should be a daily close below $230. In my case, I would only look to aggressively accumulate again if we drop back down to the lower support of the channel, below $200. Now look at the Heikin-Ashi Relative Strength Index at the bottom of the screen. On the weekly, it recently moved out of the neutral region and is pointing downwards, though broadly still bullish. But be warned, on the daily time frame, it confirmed a bearish divergence. The indicator printed a higher low while price action made a higher high, leading to this exact drop we are seeing now. I still hold 50% of my original position. My higher take-profit targets remain intact at $500, $750, $1,100, and ultimately $1,700. But I'm watching these key invalidation levels like a hawk to protect my profits. So, how do we synthesize this data into a hard game plan? It comes down to risk versus reward and the broader macro environment. TAO is a long-term macro play for me. If the price manages a weekly close below the middle of the descending channel, that's my signal to close almost everything of my remaining trading position. However, I'll always maintain roughly 20% of my original bag as a permanent long-term hold, likely putting it to work in staking or an Ethereum liquidity pool just to harvest that yield. You also cannot ignore the king. Bitcoin is currently showing massive indecision above the $70,000 region. If Bitcoin loses its footing and drops heavily below $65,000, it'll be exceptionally difficult for Bittensor to maintain any bullish momentum. This market is highly correlated. The recent move upward on TAO is already somewhat extended on the macro scale, so we absolutely need a strong, stable Bitcoin to support a continuation of this rally. My bullish thesis changes if we lose that $230 daily support. Until then, the probabilities favor a period of consolidation here before the next leg up. Let the chart decide, and don't let your emotions override the data. In my honest opinion, the $10 million subnet dump was a localized governance failure, not a protocol death sentence. With the new locked stake mechanics incoming, institutional backing holding the line, and the technicals retesting a highly logical support zone, the risk-to-reward ratio here remains compelling for patient capital. Real wealth in crypto is built by buying the fear when the underlying infrastructure remains intact. If you want to see exactly how I'm trading this volatility, including my real-time portfolio tracking and the exact buy and sell zones I use for all my assets, I invite you to join the Pro Capital Vault. It's my private community on Discord, accessible exclusively through the YouTube members program on this channel. It's built for serious position traders who want to execute without the noise. Just click the join button below this video, or use the link in the pinned comment to step into the vault. Once you join, just sync your YouTube account to Discord to automatically unlock all the private channels. Also, if you want the full context on TAO, go watch my last video about Bittensor right after this one. As always, nothing in this video is financial advice, just my own actions. Much love for watching, protect your hard-earned capital, meticulously manage your downside risk, and I'll be sure to see you in the next one.